Hi, Robert Maltbie, Maltbie's Minute on the Market, here at Carmel. Pebble Beach. No, actually it's Sandpiper, not bad, in Santa Barbara. Twilight just completed, around 50 degrees out. That's good, great golf weather. Now for the market, the market indicator update here for late February. We are, actually our indicators skew neutral, but it's important that the leadership is with the technical indicators, which is normal at tops and bottoms, so coming out of bear markets. We think there's a bifurcation that although the NASDAQ has stormed ahead, a lot of the stuff that was just pounded, pummeled, has reversed. For example, Tesla has doubled in the last month. So the real trend moving ahead, we think, is going to be more in the micro caps, small caps, and part of the marketplace, as is typical. Now, looking at our indicators, our sentiment indicators are neutral. We've got the VIX at about 20, a little elevated, the VXN at about 30. So a lot of volatility in the higher beta stocks. Looking at our technical indicators, very strong, leading the market, good breadth. Every major market index is above its 200-day in positive territory. We had a 4-day sell-off, and we're recovering from that fairly nicely. So that's a good indicator leading us ahead. Looking at the interest rates, looking at the bond market, we're looking at some inflation that has been very negative in the marketplace. But I can virtually guarantee you that the next several months, the inflation indicators will start to come in even more. That's because a good 30% of those indicators are related to real estate and owner-occupied rent, which has lagged. They're reporting figures actually that are from 4 to 5 months ago, similar to a 200-day moving average. So those indicators have been high, and now they're starting to come lower and will continue to do so. And that's the heaviest weighted indicator. Looking at our other indicators, they are also, the earnings indicator is the most negative one. We have poor earnings momentum, and we have a negative 4% quarter coming in for the S&P, but at the end, the last quarter or two, that's expected to go a bit higher, finishing up at about 4 or 5%. Nothing very exciting. Really think it's a stock picker's market. You've got to look for special situations. You've got to look for new management. And at Singular Research, if you visit our website, it's a great time. We think the micro caps and small caps are going to lead. They're trading at near epic lows, second lowest valuations I've seen since the Great Recession, at about 10 times earnings and book value, and that has accounted for a lot of negativity. And we think the road, although choppy, is on the way up. At Singular Research, we're launching on a couple new names, 2 to 3 new ideas per month. So go to singularresearch.com and sign up for our 30-day trial and get in front of some great idea flow here and now. I'm Robert Maltbie at Sandpiper in Santa Barbara. Thank you, and let's make some money.